Every year, Michigan law requires your condo association to get a financial review from a CPA. And every year, most boards file it away, move on, and miss the single most important planning tool they have. What if that report is actually telling you something your board isn't ready to hear? Under Section 57 of the Michigan Condominium Act, associations with annual revenues over $20,000 are required to have their books reviewed or audited by a certified public accountant on an annual basis. The state didn't create this requirement as paperwork. They created it because without independent financial review, the infrastructure that makes communities livable, roofs, plumbing systems, structural components, tend to quietly degrade while boards underestimate what's actually needed. The financial review provides limited assurance that your financial statements don't contain material misstatements. It's not an audit. It's not designed to catch fraud, but it's designed to give your board an independent snapshot of where the association stands financially. Most boards get this report, confirm it, came back clean, and put it in the file. That's the part that's costing communities real money. Here's what the financial review tells you if you read it as a planning tool rather than a compliance checkbox. Whether your current assessment levels are actually covering your operational costs. Whether your reserves are funded at a level that reflects your infrastructure's actual condition, and where the gap is between what you're collecting and what you'll eventually need. For many associations, that gap is significant, and it has been building for years. Boards that have kept dues artificially low, deferred reserve funding, or avoided the harder conversations with residents are often sitting on a financial picture that looks fine on the surface and reveals stress the moment something unexpected happens. The CPA review is the document that makes the stress visible. Boards that don't read it carefully tend to be the ones surprised by special assessments later. There's a second conversation most boards avoid: whether to share the financial review with residents. The Michigan Condominium Act requires that books and financial records be available for examination by co-owners. The spirit of that requirement is transparency. And associations that operate transparently tend to have fewer conflicts, not more. When residents don't understand the financial position of their community, they're operating on assumptions. Some assume the reserves are healthy. Some assume the board is hiding something. Neither assumption is useful. Most boards that communicate financial realities clearly, including the difficult ones, build the resident trust that makes it possible to implement realistic assessment increases, approve necessary capital projects, and govern effectively over the long term. The financial review is the starting point for that conversation. If your most recent CPA review is sitting in a filing cabinet rather than driving a board planning conversation, your association isn't getting the value the state requires you to pay for. And if your financial picture has concerns, deferred reserves, tight operating margins, growing deferred maintenance, those concerns don't resolve themselves. Professional management guidance can help you understand what the numbers are telling you and what to do about it. At ManageMax, we know that effective community management is built on transparency and systematic excellence. We provide full-service HOA and condominium management across Southeast Michigan, handling everything from accurate financial reporting to proactive maintenance. Our goal is to reduce the burden on your board while protecting your property values. If you're looking for a partner who values accountability as much as you do, visit us at managemaxproperties.com. Let's build a stronger community together.